Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Sebastian, Chief Operating Officer, Option Pit, to discuss if the AI trade has passed its prime. Market's interesting. We're seeing some activity, a lot of put volume on NVIDIA. When you think about the space more holistically, do you think the AI trade it's already been put in?
Well, what I'll say is the timing of that rebalance last month, I don't think could have been better, because basically they completed the rebalance and we saw weakness in what is sometimes called the Magnificent Seven, the FANG names. If that rebalance had not happened, the move in the Nasdaq 100 would have been a lot more pronounced over the last week and a half since August started. August has really started off weak for the Nasdaq 100. But yeah, you look at kind of the charting that's happened among a lot of the AI names. Some of the shine has come off. There's still a massive premium priced in there. We still have a couple of big AI names that are going to report, and those come in soft, and you could definitely see the chip sector, which is having a really strong Monday, take it on the chin.
Yeah, well, I mean, when you think about it, the story was really strong the first 6 months of the year for AI, but now you're gonna have to start translating that story to justify the valuations and the multiples that we've seen here in terms of what products they're introducing, what revenue are they deriving it off of. It's almost, when you think about startup companies, you can have a great story, but until you can show profitability or revenue coming in from these stories, it's gonna start to matter over the next couple of quarters.
Yes, the PEs in a lot of these names are astronomically high. And if the dollars don't start coming in, we're going to see these names punished. And we've seen a pretty strong trend out of this earnings season so far. Stocks that run hot into their earnings are tending to get thwacked, and stocks that are not seeing a big rally into these earnings are able to take advantage of the positive earnings that have been coming out. Earnings season has not been bad. The problem is that a great earnings season was priced into several names, and those earnings ended up just being good, and so they took it on the chin. That's why we saw some of the price action out of those names and have seen them pull back somewhat significantly.
So when you think about the next 4.5 months of the year, right? We have one more earnings season to go through. We're going to start picking up on election rhetoric. What do you think? Do you think we continue to chop to a little bit higher into the end of the year? Do you expect a swoosh out here from the bottom? What are your thoughts as we go into the end of the year? Because it's interesting, we've climbed this wall of worry, but the same challenges that existed in January still exist now. So do you think the market continues to climb that wall of worry?
You have to watch the bond market. The move over 4% on the 10-year really spooked markets and sent. That's really what led to the beginning of August sell-off. The bond market, implied volatility is really high. There's some expectations that we could see some action here. So if the bond market starts to really soften up, that is going to be really problematic for notably the Nasdaq 100, but it'll affect the S&P as well. Along those three indexes, the S&P, the Dow, and the Nasdaq 100, the S&P and the Dow have really converged. The Nasdaq 100 still has a big outperformance on the year. I'm interested to see whether we see some mean reversion, and that is going to happen if rates stay high or rates continue to climb.
Well, I mean, we also think about where the Nasdaq 100, the underperformance that it had in 2022. So, I mean, it's kind of, the opposite of what we're seeing this year. Why do you think the bond market and the equity market, they're telling two very different things when it comes to the macro outlook?
Yeah, it's interesting. The equity markets are kind of shrugging off the risk of recession, trying to basically say the Fed's done raising rates. Meanwhile, the bond market is really starting to act a little worried here. It's approaching some of the highs that we saw early in the year when the Fed was jacking up rates. So this story is not done. The Fed minutes this week, I think, are going to be very interesting. Jackson Hole coming up in about 2 weeks is going to be, I think, one of the most, definitely the most important event for the rest of the month, on top of the earnings that are going to be next week, which I do think are going to be pretty big.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.